Last week was very interesting for those investors who closely monitored the dynamics of the stock market. U.S. benchmark indices rose sharply over the week amid strong U.S. economic data and Biden's new stimulus plan. Today, the situation in the equity market is quite uncertain. Will the U.S. major stock indices continue to rally during the week or slip into a correction? Let's find out. The Dow gained 600 points or 2%. It rose to 33,530 last week. This is a historic moment. Currently, the Dow is trading at its peak levels. It means that the shares of technology corporations are again in high demand among investors. The index is expected to jump to 33,800 this week. It may also remain near the lower border at 33,200. Analysts believe that its growth will be fostered by strong economic data. The jobs report for March showed a considerable improvement in the labor market, with the unemployment rate dropping to 6% from 6.2%. Additionally, in March, the manufacturing PMI as well as services PMI indices soared to 63%, surpassing economists' forecasts. The S&P500 also surged last week, growing by 120 points to 4,077, so it gained 3% over the week. And now it's trading at the indicated level. However, it may well increase to 4,150 with a possible correction to 4,020. The catalyst for its further rally could be an ultra-soft monetary policy of the Fed. NASDAQ advanced by 700 points to 13,700. Its overall gain totaled 5% amid the news about a new $2.2 trillion stimulus plan proposed by Biden to boost the economy. Yet the discussion of this plan is likely to be postponed as the Biden administration is bracing for heated debates on raising taxes to fund this new stimulus bill. In the meantime, the NASDAQ index is trading in the range of 13,400 to 14,000. This week, it's recommended to pay attention to Oracle shares. Google won the copyright fight against Oracle in the Supreme Court. In the lawsuit, Oracle claimed that Google developed Android illegally using its proprietary technologies. After a lost trial, the company's shares may decline by several points. Apple stocks also jumped last week amid the news about the company's plan to build its own self-driving car. Last week, the shares of cruise operators added gains as they were able to continue their work after the blocking of the Suez Canal. In particular, on Monday, Norwegian cruise line stocks closed up by 7.18% to $29.71. Since the beginning of the new week, the stocks of other cruise companies have also climbed up. Carnival shares rose by 4.65% to $28.11, while Royal Caribbean shares moved higher by 2.86% to $89.15. So far, there have been no negative reports to worsen investor sentiment. Vaccination rates in the US are high. This is why traders hope that the third wave of coronavirus will not be so devastating in the US as it is in Europe. More than 30% of Americans have already been vaccinated. However, the stock market is unlikely to grow dramatically in the near future. The indices have already slightly corrected downwards as bears are taking the upper hand. This is why their growth is likely to be modest. You've watched Weekly Financial Review on Insta TV with me, Anna Kasatkina. See you back soon.